Good morning and hello, I'm Professor Code. This is the Forex Supermodel Racing Review and Forex Briefing for Tuesday the 13th of December 2022. Anyway, we'll have a look at yesterday's results first. So Monday the 12th then, we're at Lingford on the all-weather in the 1242. We had to go at two horses against this heavily odds-on horse, Hubert's Dream. Which was basically we did the analysis and we basically said that this Hubert's Dream had been raised roughly £15, been running against mid 65 horses to get its raise, and these two were potentially number 2 Royal Mariner, was it? I could have written it correctly. Yeah, Mariner. Royal Mariner and Gerald of Riviere had been in better races, albeit they hadn't won. Now, and we decided that there was good risk return to having a go at those. So anyway, subsequently we initially got on pound per £8 unit, which is £100 a piece for us at lower odds. What did we get? We got 6.2 and 5.8. So we got roughly sixes on both of them, and then you had the drift, which we thought might happen, and we just kept topping up, and we ended up topping up to £500 a piece. So that was £1,000 exposure for us, which represents 1.25 units. And in the end, this Hubert's Dream sort of was allowed to go on. And to be fair, if you watch the replay, it was the superior horse, and we thought it would be challenged by these two, and to a degree, this Royal Marin, this Gerald of Riviere gave it a bit more of a go, but it still wasn't going to get past it. So was that a good use of £1,000? Well. In normal life, you would say absolutely not. You could have done a lot of good with that money, but we're not in normal life. We're in betting, and if betting is your business, then it's just like you're buying a risk product, and you're accepting the value to potential loss to profit ratio on that. So you can't start saying, well, I could have had bought a new fur coat for the wife or whatever. With that £1,000, well, you can say that, but you won't get very far in the gambling world with that attitude. So anyway, the account came down again, quite a bit actually, down to 51 units in profit overall, from a peak of about 72. So we've lost 21 units. We had a good thump down, but we're still in the game. And we're moving into our N-1 filters, which is and we've got one tomorrow at Lingfield, which we'll talk about tomorrow. Anyway, so that's that. Unfortunately, today the racing is just down to two weather meetings, which we can't really hook anything out of. So we're going to have to no bet it today. But we're in up to our necks on Forex today. So Forex then 13th to 12th. You've got US CPI, Consumer Price Index, which is basically inflation data. Tier 1, 13.30, half past 1 lunchtime, sort of UK. And this is boxed in by tomorrow with the FOMC Fed rates decision, subsequent minutes and meeting and all the rest of it, press conference. Right, so the market's going to be very twitchy about this because it's all linked to this sort of this terminal rate in the US interest rates and the so-called Fed pivot. Now, we've had a look early on, and the markets are sort of dirging at the moment. But you need to keep. This morning, it's going to show its hand. You want to be looking at gold, if that would work. So you want to be looking at the gold market, which has got a very strong inverse relationship to the dollar. And expectations in inflation. So that's one thing you want to look at. You want to look at USD Swiss. That's an important one. The Swiss is very linked with gold. 25% of the Swiss National Bank reserves are backed by gold. So that's quite interesting. So keep an eye on that. So So basically, if the dollar rises, and then it will lead to a fall in gold and probably a fall in the dollar Swiss. So you can use those transmissions to keep an eye on what's going on. And then the other one is the US 10-year. US 10-year, have a look at the US 10-year bond market, and assuming you're looking at the price, and they've not got the yields up there, but assuming you're looking at price, if the price goes up and the yields are coming off, that means the dollar's likely to be dropping. So there's an inverse relationship to that. So if the price of 10-year bonds go down, the likelihood is that yields are rising and the dollar's strengthening. So and you're likely to see a more hawkish FOMC. So all that's just general blurb on transmissions. So what you need to do, well, I'm likely to be able to give you the final nod, making a video just before the off. So what you need to do is you need to look at these transmissions. You need to be looking at the 7 USD FX pairs. So it's euro dollar, dollar yen, pound dollar, dollar CAD, AUD dollar, NZD dollar, and dollar Swiss, as we've said. They're the 7 ones. And then if you look on about a 10-minute graph, you'll see the whole day from the 13th chart, or whatever you want to call it. So you'll see. So if you go on the 10-minute chart, you'll see from the 13th, and you'll see the 10-minute situation. So what you want to be looking for is something that's been clearly pumped or compressed, and then link it in with these transmissions and try and make an assessment. Then you want to put an order in which will cause maximum pain to the short-term mark. So you know, if you've got a pump up in dollar, what should we say, dollar Swiss, say, then the likelihood is that you'd want to put a sell order in there, but we talk about that in other videos. But anyway, it's not as clear cut as that. It's just to give you an idea. So to summarise then, it's going to be quite a good thump when this data comes out, unless it's very neutral. Even then you'll get good positioning. So watch out for the gold market and the USD Swiss and the US 10-year, and keep an eye on the oil market as well, because the oil market will be linked either in terms of demand destruction or reduction in the dollar may well give the oil market a push up. So these are the transmissions you want to be looking at, and good luck if you can have a go, and likewise we'll see how we go. So anyway, thanks for watching, thanks for subscribing, and goodbye.